Hello, accounting students. I hope you have had a great day so far. Today we are going to learn 4.2 and we're going to learn how to post to the general ledger. So at this time, your workbook should be open to page 61 and you'll be using pages 61, 62, and 63 today. And then your textbook should be open to page 108 that provides a little bit of instruction on what you're going to be doing today. So go ahead and pause and get everything out ready to go. So you're on page 108 in your textbook, you're in your workbook, 61, 62, 63. Now as we get going, I do want to review our accounting cycle. We'll just cover our first 4 steps. So if you can think in your mind and even shout out in class today if you would like, the 4 steps of the accounting cycle. I'll give you a few seconds to think about that. All right, step 1 in the accounting cycle is analyze source stocks. Step 2 in the accounting cycle is analyze transactions. Step 3 in the accounting cycle is journalize transactions. Step 4 in the accounting cycle is post to the general ledger. So that's what we're going to be learning how to do today. So basically the reason that we need to post to the general ledger is so that you have a running total of each account balance. So for example, if we wanted to know how much cash we actually had in our account, if we took a look at the general journal, it would be very difficult to try to figure that out. And so that's what the general ledger helps us to do. So at any given time, if you are the accountant of a company and someone asked you for some information, you would be able to give that to them. Also, it's very helpful because it helps us to determine, and for example, accounts receivable, what accounts are still outstanding with a quick look versus having to look through the full general ledger to see that. Or let's say, for example, Ready Supply has sent you a bill. You want to go to your general ledger and confirm that that is actually your balance before you go and pay for that. So this is just a great way to ensure that the information that you have correct, and again, another way for a check and balance. So basically, all you're going to be doing is you're going to be taking the information from the general journal today, you're going to be copying it right into your general ledger, and then you'll be doing a balance. So let's go ahead and get started. Let's take a look at our first transaction. So on page 61, you see your general journal, and it's a completed journal at this point. So you're assuming that we have already completed these transactions. So your next step is we need to take these transactions and we need to put them into the general ledger. Now every single line currently in your general journal needs to be posted to the general ledger. So we're going to go ahead and start with cash. So we see on April 1st, it says cash, and it says we have a debit of $2,500. So in your workbook, you now need to turn to page 62. You will notice the very first account listed is cash, and that account number is 110. So we need to record a debit of $2,500. So if you take a look, we're going to go ahead and write the date, April 1st. In this situation, we don't need to write an item because every item that we list in the cash account in the general ledger is going to be cash related. So we actually don't have to record anything under the item. Now you're going to notice that there is a post reference. The post reference is G1. What the post reference means is where did we get this information that we're posting? And if you take a look on page 61 at the top, we have General Journal, page 1. So the symbol for General Journal is G. The 1 represents the page number. Now it's 2,500 debit in the General Journal, so we're going to debit it in the general ledger. At this point, we have no balance, so we're going to carry that 2,500 over into the debit. Now your very last step is to now put a post reference into your general journal. And our post reference is going to represent the account number of the account title. So in this situation, we take a look at cash as our account. The account number is 110. So we're going to go back to our general journal and we are going to record 110. I'll go ahead and pause and let you do that. All right, now our next line is Omar Capital, and we debited cash for $2,500, so we've credited Omar Capital for $2,500. So again, you need to take a look in your general ledger on page 63, and you will find Omar Capital. And we are going to do the same thing that we just did with cash. We're going to record the date, April 1st. We have our post reference that we need to fill, which is G1. And again, we're getting that because it's coming from the general journal, page 1. And this time it's a credit, so we're going to credit it for $2,500. And now meaning our new balance is $2,500. All right, let's move on to the next transaction. Going back to page 61, our next transaction was a prepaid insurance with cash transaction. And so prepaid insurance, $330 debit. So you need to go find your prepaid insurance account on page 62. We're going to do just what we did before since it is a debit balance. Okay. We are going to record the date, April 3rd. Again, it is from the general journal, page 1, so our post reference is G1. It's a debit of $3,030. There is currently no other balance in prepaid insurance, so we just write $330 in the debit balance. Now let's take a look at what's happening with cash. Oh, and then first, of course, don't forget, go back and record 140 in our general journal. That's the one step that students missed. When you take a test, if you miss that step, that's part of, depending, could be the accounting mechanics. Sometimes it may fall under the general ledger standard posting to the general ledger. All right, so don't forget to do that. All right, so now let's take a look and see what's happening with cash on this transaction. In this situation, cash is going to be credited. So again, we need to find our cash account, taking a look on page 62 in your workbook. The date is April 3rd, and we need to credit for $330. So we're going to write the 3, again our post reference, G1, coming from the general journal, page 1. But this time we need to record the $330 in the credit column. Now, we had a debit balance of $2,500. Now we have a credit of $330. If you have a debit balance with a credit, then to get the new balance, you need to subtract. So we would take $2,500 minus $330 to get our new cash balance of $2,170. Now, if it had been a debit and a debit, what would we have done? Yes, we would add the two numbers. Now, if the normal balance is a credit and something's credited, again, if it's a credit and a credit, you're going to add. If it's a credit balance with a debit transaction, you're going to subtract. So anytime the transaction and the balance are both the same, debit, debit, or credit, credit, you're going to add them. Anytime that there is a different the balance is different from the transaction, one debit and credit or credit debit, then you're going to subtract to get your new balance. And then, of course, your last step, we need to go back to our general journal and we need to record the account number 110. Okay. I'll give you a few moments. All right, let's now take a look at the next transaction. Again, now I've kind of cleared it. We are now on transaction for April 4th, supplies and accounts payable. Again, hopefully this is nothing new. You should now be able to tell me what the steps are. So if we have supplies, we should be looking for which account in the general ledger. Yes, supplies on page 62. Supplies is being debited for $160. So let's go ahead and record that in our general journal. So we put our date, April 4th. Our post reference, general journal, page 1. It's debited for $160. There is currently not a balance, and therefore you need to debit for $160. And then our last step is to take the account number 130 and record that back in the general journal. All right, let's take a look at accounts payable ready supply. That was credited for $160. Let's find accounts payable journal for ready supply on page 63. Again, it is April 4th. We're getting our information from General Journal page 1. Record that in the post reference. It has a credit balance of $160, so we'll record $160. And there is currently no balance, so we'll record again $160 into the credit. And what is our last step after that? Yes, of course, you need to post the post reference back into your general journal, into the post reference column for accounts payable ready supply. That account number is 210. We're going to record 210. All right, let's do one more together and then you're going to do the rest on your own today. All right, here we are. It is April 8th. We have cash is being debited and sale is being credited. All right, so we're going to go back to our cash general ledger account on page 62. We've already recorded two items on here, April 1st and April 3rd. We now need to record April 8th. All right, so again, we write the date. It was a post reference of G1. The amount was $325 debit, so we record that. Now, we have a cash balance of $2,170, and that is a debit balance. We've now recorded another debit of $325. So if the balance is debit, the transaction is debit, what do? We add. So we're going to take $2,170 plus $325 to get our new cash balance of $2,495. And then our last step is, don't forget to put the post reference in your general journal. Again, this is cash, so our account number is 110, and we'll record that there. Whoops. Okay. All right, let's finish the last part of this transaction, and then you can go off on your own for a little bit. Next part we have is sales. It is credited for $325. So we need to find our sales journal, our sales account in our ledger on page 63 of your workbook. Again, the date is April 8th. We're going to do a post reference of G1, General Journal, page 1. That's where this is all coming from. Sales had a credit balance of $325. The current balance in this account is 0. So we're going to record the $325 in the credit balance column. And then, of course, our last step, record $410 as your post reference in your General Journal. All right, you have 5 more transactions. What I would like you to do is I would like you to take an opportunity right now and complete those with your table mates. At this time, you need to pause the video to do that. And once you have completed it, then the next slides will have the answers to the video, to the work together. Mr. Edstrom also will have the key, so you can check the key on there as well. Then, after you've completed the work together, you need to complete the on your own, and I will check those when I am back to class. So you want to make sure that you have completed that so I can check for understanding once I return. So please pause the video. Okay. I assume at this point you have now completed the work together. It's now time just to double check your answers. Here we have our general journal, and you should have all of your post references listed. Double check to make sure that these post references that you have are the same as the key. So pause the video to double check that. And now let's take a look at our general ledger. This part of the general ledger is page 62. Go ahead and double check your answers. Key really making sure that your balance that you have is correct, that you've recorded things in the correct columns and you've got the correct balance. One thing I would like to draw your attention to is the balances that we have in the general ledger. So what is the normal balance for assets? I hope you all just said in your mind debit, or maybe you even chose to shout it out today. Debit is the normal balance. What do you notice about the balances in the general ledger? Yes, they are all debit. If for some reason you did not have the normal balance, so let's say for example you were showing credit in cash, there's 2 things that are happening here. One, hopefully you just have an error in your accounting and that you made a mistake in recording something someplace. If you go back and you don't have the mistake, that means that you have overspent what you actually have in your cash account, and that's a problem. Let's take a look at accounts receivable. Let's say that there was a credit balance for Dan Carroll and his accounts receivable. That would mean, again, 1, you either made a mistake, or 2, Dan Carroll overpaid and we actually owe Dan Carroll some money. So again, we want to make sure that those are all accurate. All right, let's take a look at our other accounts in our general ledger. All right, so on page 63, we have our asset accounts, our capital account, our owner's equity accounts, our revenue and expense accounts. Again, I want to ask you, what is the normal balance for each of these? So if we take a look at our liabilities account, accounts payable, what is the normal balance? Hopefully you just said in your head or you shouted out that the normal balance for accounts payable is credit. Again, you will notice that in the balance column, again, there is credit. Now, if for some reason, again, we're showing a debit balance in our final balance columns, two things. 1, we made a mistake in our recording, or 2, we overpaid Ready Supply, and we don't want to overpay them. Taking a look at our capital balance, what is the normal balance for capital? Credit, yes. And again, you'll see under the balance columns we have credit. Let's take a look at our drawing account. What is the normal balance for drawing? Debit, yes, and that is our balance. Let's take a look at sales. Normal balance for sales is credit, and that is our balance. And then taking a look at our expense, what is the normal balance for expenses? Debit, and that is the balance that is there. So again, those are just a few quick ways as you are taking a look at things that you can check things. Now, number 2 in your book, it says to prove cash, the balance on the next available check stub is $1,720. I will do that with you when I am back together in class. Now, at this time, you need to complete the on your own 4.2, and I will check that when I return. Have a great day.